Let's start with that. The top line pretty flat at 16 billion naira for Cadbury. We still saw the share price go up, but I think for me the story around Cadbury is that we've now begun to see a decline in the strong growth story. It was really boosted by the finance income they made. I'm talking about the bottom line, that is. But your thoughts overall on those numbers?
Okay, thank you very much, Wole. You recall that sometimes earlier this year we discussed Cadbury on this same show.
Right.
I think in the last 1.5 years, Cadbury has taken its time to invest in capacity expansion, to invest in processes, to ensure that they have high level of efficiency. They're able to cut a lot of costs. The generator they have now is powered by gas, and that has resulted into a huge cost saving for them. The partnership they have with the Kraft Food, second largest food maker in the world, it's another very good strategic move by them to ensure that they declare good results to people. The marginal drop in top line that we saw in the last results was account of the problem that we have around the country, the other part of the country where we have crisis and the weak purchasing power that we have in the country. In the next half year, historically, the second half year result is usually better than what we have in first half of the year. So we expect strong growth, we expect efficiency, we expect cost-saving strategies which they have implemented to drive the bottom line in the next half of the year.
It definitely sounds like you like the stock. Where do you think it can go from here? We saw the market reward it with a 4% move up. Well, I did say that it was really the, if you like, extraordinary income from finance income that boosted the bottom line. So the top line was flat, but the market still rewarded with a 4% move. Where do you think the share price can go?
Well, we released a note last week. I'm sure you have received that. Right. We expect the price to get to about 21 naira end of year. Then this year, in the last 6 years, they have not given any dividend. We expect them to give a dividend of about 1 naira 20 kobo to end the year. So by the time you add all these together, the total return is in excess of 20%.
I mean, you just made a good point. That's significant. In fact, they haven't paid dividends in a while.
Yeah.
And we know that they were restructuring, so we have to give them that time to get back on track. But how significant would you do you think that would be? Because, you know, Cadbury should really be seen in the light of the likes of Nestle, Unilever. When you look at the valuations of those companies compared to Cadbury, you get a sense that there's still significant upside for Cadbury.
That's correct. I mean, like you said, in Nestle, if you look at the current P ratio of Nestle, although the business model of Nestle is slightly different from what we have with Cadbury, has diversified product mix for Nestle. This one has just 3 major, product now. But then with the introduction of Kraft Food, they will have a wider range of product. But then if you look at the current valuation of Cadbury, Nestle, P ratio of about 25 times earnings, and you look at that one to capitalize, the EPS, current EPS of Cadbury, about 1 naira 20 kobo, you discover that you have a price of in excess of 30 naira. But then we think that there is still high upside potential. Like I said, fair value is putting us about 21 naira. So at the moment, it's still undervalued.
Right. Let's talk about fast-moving consumer goods companies. I mean, you already mentioned the fact that the top line number was a bit depressed by the situation we're having in the north, and we just heard about another attack over the weekend on the church in Borno State. How are the FMCG companies managing this? And your thoughts on how well they can manage it going forward?
Well, it's a bit difficult, actually. I mean, it's a situation that is beyond their control. It should be the federal government that putting measures on ground to ensure that they forestall all those problems. No company in Nigeria can embark and successfully provide security in the country. They can provide security within their premise and along their major distributors. But then,
of course, when they have to move the products, and all that,
so that your problem. But what they said they have been doing over time is to ensure that they reduce the quantity of goods they sell to these people, and with time they will be able to penetrate to this region. And again, you know that people over there too, they will have to eat. They will have to eat, take these food drinks, so they can't survive so long without it. So they will have a way out of it. But anyway, we think that the federal government should be able to, going by their promises and the plans they have on ground, to put an end to the security challenge in the country, is that to instill more confidence in the economy.
Well, it's clearly a challenge, and of course the government has to deal with that. But let's talk a bit about how they can improve their efficiency. One positive for many of these companies is that the Naira has been fairly stable over the last few weeks, and we know that even if it's just their machinery that they tend to import, that's definitely a positive. But of course, many of them also import quite a number of raw materials. Talk to us about your thoughts on how they're managing costs. Cost is a big issue for the banks. I imagine it's still a big issue even for manufacturing companies in Nigeria.
Yeah, I think in the last 2 years, what most of them have actually done, like I mentioned earlier, is to change their power mix. You see a lot of them now running on gas-powered generator. Like I said, Cadbury in the last 1.5 years, they installed about 3.6 kVA generator that is powered by gas. This is what we see in all of them. In manufacturing companies, in cement manufacturing companies, that's what they are doing at the moment, okay? Because, the alternative is high. Again, in the last 1.5 years, last 2-3 months, I'm sure all of us will realize that the power generation and distribution in Nigeria has been,
there's been an
improvement in that. And again, apart from saving costs for the manufacturing companies, which is, of course, a major source of their cost, is going to improve the purchasing power of you and I, the consumers. Okay, so overall, we ensure that we have a better, ability to buy their product, and for companies as well, they are able to produce at a low cost. So eventually you see it's whereby you have improved bottom line for these companies coming from both increase in turnovers and cost saving strategies that they have put in place.
All right, a final point for me would be coming back to the markets and where you see the share price going. The other factors that I think impact share price is liquidity. I just discussed that with Jude. Your thoughts on liquidity of Cadbury's shares?
Well, I think it's fairly liquid. However, substantially, it's held by Kraft Foods now.
Right.
Okay, because we have, and it's not unexpected, because during that problem, when they discovered there was a misstatement in their account, what they did was to do it right, and the most Nigerian investors lost confidence in that company. But the parent company took advantage of that to increase their stake in the company. So I think they have 74% holding in the company now. But then, for anybody who wants to sell and buy, it's fairly liquid. People are able to buy and able to sell. And that's why last week, Friday, you see that the price even appreciated and led the gainers table last week, Friday. All right.